This episode of Untold Stories is sponsored by Public.com and Ledin.io. You'll hear more about them later on in this episode. What is up, everyone? I am your host, Charlie Shrem, and you are listening and watching another beautiful edition of Untold Stories, where twice a week together we get to dive deep with some of crypto's most influential leaders to find out how this movement truly came to be. And what we're learning is where are we right now and where we're going. And on today's episode, we're actually going to learn about a lot of cool topics, some things that I like to call proof of brain, tapping into your brain trust, being able to use that capital and the resources that we have in these thick skulls of ours, and be able to translate that into the financial future of tomorrow, be able for our families, but also be able to have a high quality of life and to be able to wake up every day and smile. And I think that's the most important thing. And today on the show to talk about that, we have Adam Jackson, one of the co-founders of the Braintrust project. Adam, thank you so much for taking the time and coming on Untold Stories today.
Charlie, thanks for having me, man. I'm a big fan of this show and excited to come on and chat with you.
I'm a big fan of the show too. It's like episode 238 or something, and I'm just starting to now think about what like a season 2 will look like. I'm thinking of producing maybe like a comedy variety show, like an SNL for crypto once a month live in a studio. I don't know, like a wait, don't tell me type of audio show. There's so many different things that I want to do, but I love doing this. This is my right here, be able to sit a few days a week and talk to some really cool people about some really cool topics. It's what we're here for.
It's awesome. I love the format. Somebody needs to do an SNL for crypto though. I mean, all you got to do is go on Twitter for about an hour and read the tweets, and there's your show.
Yeah, right. It's a good point. So brain trust, and I want to jump right into it so we can utilize all the time that we have. But Braintrust is an idea that probably back in the early days of Craigslist, this was thought. I mean, Craigslist was invented to do exactly this. Because if folks who remember, Craigslist was one of the first way on the internet that we not just communicated with each other, but we started transacting with people we didn't know. And that is a big thing, because back then, that was probably step one into that metaverse that everyone talks about now. Just people and socially, it's a slow move, but being able to do that. And now fast forward, we have 2021. Braintrust is one of the first decentralized talent networks that connects skilled, vetted, knowledgeable workers with leading companies. And what's very cool about this, and why I love how, kind of what you did with a blockchain-based alternative here, is that the pricing mechanism. And I want to understand more about that, but essentially, you guys do all of your key value proposition is your efficient price discovery. But before we get, how everything is priced in, before we get kind of into that, I want to understand why Craigslist still, in your opinion, hasn't been disrupted yet. Why does it still exist?
Yeah, this is a really interesting take on this. And I haven't thought about the way you approach this until just now, but it actually makes sense. So Craigslist, was the first ostensibly, web service to connect buyer and seller, right? And it turns out, that was Web 1, right? And then Web 2 introduced trust. What Craigslist had that was amazing was no rake, right? It was free to use. And that enabled all these amazing transactions. You could buy a car, you can get an apartment, you can buy a house. All these categories, sprang up from products to services, all peer-to-peer. What they lacked was trust, right? So the Web 2 innovation was create a place to transact and introduce trust and reputation. Oh, and rake, right? So Web 2 innovated the rake, and the rake, got out of control, right? It's, anywhere from 25 to 55+%, depending on the category. And so trust is amazing. It's essential, right? It's so hard to transact without it now on the web, or at least some kind of provable identity, et cetera. But the rake ends up killing the potential of the marketplace. The higher the rake, the more incentive there is for the two parties transacting to disintermediate
like the
marketplace
VIG
operator.
we used to call it. Yeah,
the VIG, the rake, whatever you want. Fees, they're awful. The higher the fees, the less interesting transactions can hit the marketplace. And so, with Web3, it's almost like going back to the Web 1 days from a rake perspective, right? Web 3 inherits inherits reputation and trust from Web 2, but sheds the rake, gives the power back to the users, just like in the Craigslist days, but creates this place where now your reputation can live online. You actually know who you're dealing with because the identity and work history of someone is not Upwork or Fiverr's intellectual property. It actually can live on the blockchain and can be transparent. So back to your question, I couldn't help but draw that kind of Web 1, Web 2, Web 3 narrative. But and I'm going to use that now because before you said it, I'd
Yeah.
never thought of it. But why has no one disrupted Craigslist? Because when you introduce rake, you leave room for players that take no rake. And so Craigslist operates in every single category except tech jobs in San Francisco, where they charge a $75 fee. That was last time I looked, it might be higher. But so all these Web 2 marketplaces that, put a nicer UI and take a huge fee, there's still room for Craigslist, right? There's still room for the no rake carrier.
It's really interesting because I look at the stories now about how folks who are turning $500 into 500,000 folks who are turning 500 into 5 million. It's not, we're almost desensitized to it. We see it often. If you're willing to do the work, listen to the show, and understand how kind of like the innards of this new internet that we're building works, you can make a lot of money. It almost reminds me of that guy who turned like a Snickers bar into a Porsche on Craigslist. Do you remember that? It was like
Yeah,
a few, like,
trade for this, trade for this.
yeah,
Yeah.
exactly. But that's what efficient price discovery, they be able to have two parties where there's trust and all of the different metrics of like the trust and everything kind of goes into effect. And then at the same time, elevating that into services. So it's not just about products, it's about services, but it's not just, like Amazon Turk, just data entry services. These are highly specialized services where you have to have, through Braintrust, efficient price discovery. Why start this? This is not a low hanging fruit. Obviously, Craigslist still exists, so it's not a low hanging fruit. Why?
Yeah. The big idea behind Braintrust was the idea that a user owned network could grow faster and become more valuable than an investor owned network. And so the way I came to this theory was, my background was I'm a software engineer, came out to California, turned entrepreneur. I've been starting and investing in Web 2 marketplaces my whole career, e-commerce, automotive, healthcare, and investing in many more. And I realized, like, the more fee you take out of these transactions through the rake, the more incentive misalignment you have between the users on the network and the folks who own the network. And because Web 2 marketplaces are all venture backed, they end up being investor owned.
Can you say that again?
Yeah. Which part?
I want to go more into that a little bit about the incentives of users versus owners.
Yeah. So let me back up. So, like, the playbook for Web 2 marketplaces, eBay probably being the first, all the way up to, these giant gig economy companies like DoorDash and Uber. The playbook for starting those is you raise a ton of money, hundreds of millions or billions in venture capital. You use that money to subsidize one or both sides of the marketplace, kind of like how Uber started and we're giving rides away really cheap. Lyft, same deal. DoorDash, it was cheaper to use DoorDash and go to the restaurant at some point, right? And they subsidize the marketplace in order to gain liquidity, right? To attract buyers, attract sellers, supply, demand. If they're lucky enough to break Earth's orbit and actually build a valuable marketplace and a brand that people want to use and transact on both sides, they're very lucky, right? They've now raised billions of dollars. Now it's time to pay back the investors. And rightfully so, right? Those investors were risk capital. They deserve a return. That return comes in the form of higher and higher fees, or rake, or VIG, whatever you want to call it. And so the higher the rake goes on these marketplaces, the more incentive there is for those users to leave, right? And so my big idea back in 2018, when we were writing the token economic paper for what is now Braintrust, was User-owned marketplaces will grow faster, become more valuable than investor-owned marketplaces. And so the idea is invert the Web2 playbook where you raise tons of money and you're owned by investors and then you have a big rake. Invert all of it. Raise minimal amount of money. Get your users involved early and often instead of hiring tons of employees. Give control and ownership of your network away. This is where the token comes in, right? Because you couldn't give 50 million Uber drivers shares of a Delaware Sea, and who are spanning 50 or 60 countries. Control of Web3 networks comes in the form of a token. And because the users who make their living on this network also control it, they have an incentive to not charge themselves a high rake. So that enables the rake to come down. So our rake on talent with Braintrust is 0%. Clients pay a flat 10% fee. It's meant to break even. And now when you have these really low rakes, big, interesting, ongoing jobs can transact on the marketplace.
This is very cool. So, oh wow. So what type of work? I mean, you go to braintrust.com, you use braintrust.com. It's like looking at Indeed, not like I'm looking at a Craigslist.
Interface matters in this world, as you know well. It has to be presentable. Craigslist UI was not our North Star. Their fee structure was.
I don't think it's anyone's North Star, but it worked for some reason. Do you remember when I think there was a new UI that launched in 2007, maybe. No, 2011. It was called Bootstrap. And a lot of from Twitter to Coinbase to BitInstant, we were all using this. It was free. It was beautiful. It was so simple and looked good. But this looks a lot better. So is there a mechanism in which in the future we can tokenize our brains, or tokenize the future value of what our brains can do into some sort of financial tool that you can leverage? Does that kind of make sense?
I would need to ask follow-up questions for that to make
Yeah.
Can you give me an example?
Okay, so you have someone on the platform that's continuing to earn income, to make the platform they're a holder, they're continuing to make the platform grow, the blockchain grow, attracting more users, more people on it, more job postings, more different type of things all around. Can a person build a reputation that can then be borrowed against? I'm talking about tokenizing human capital.
That's a cool idea. Well, that is not currently a feature on Braintrust that I'm aware of, but it's a good idea. You're essentially proving your intellectual ability on chain, which we do today. So on Braintrust, you bid on jobs, you get the job. Say you're going to build a piece of sophisticated software for Goldman Sachs. You complete the job. Goldman's happy with you. So you earn immutable reputation that you were 5 out of 5 on all the aspects you got rated on, and you did the job and earned say $90,000 for doing the job. That's all your immutable work history. That starts to build a fingerprint, basically.
That's what I'm getting at, tokenizing that reputation, especially the more highly specialized thing. Like you said, someone building software for Goldman Sachs, that's a long vetting process that Goldman Sachs doesn't allow everyone to. Obviously, you have to have certain probably have to pass certain tests and things like that. But once you do that and you're on that course, that could be tokenized to not just benefit the one who's doing the work, but benefit the blockchain itself.
Yeah, it's a really cool idea. I've never heard anyone say that before. The first step of that is proving you are that good by completing these jobs and getting these reviews done, and then increasing your hourly rate. Back to your point about price discovery, the interesting thing about what we've learned running a global talent network is that there's unlimited demand, global demand for tech talent, and limited supply. And so we're not, we essentially, Braintrust is essentially a matching engine. It's a DEX for technical talent. And so price discovery is, we're about to publish a global real-time dashboard that shows actually the real-time rates for hundreds of different different skills that transact on brain trust. So that's the first step to tokenizing intellect, I guess.
And I want to understand this more. I want to understand this a little bit better because a lot of people are asking today, how do you do price discovery of NFTs? But I ask more deeper questions than that is how do we do price discovery of everything? Because everything will be tokenized. Our brains will be tokenized. There'll be price discovery on us. There'll be price discovery, everything that can be and will be securitized and tokenized. Because like you said, it creates more efficient rakes. It creates more efficient VIGs. It allows both parties without needing trust. And I think that like just this morning you had the CPI numbers, and then you have the employment numbers coming later on this week. Do you think that we're the way we kind of take employment numbers, is that wrong? Because as we go towards, like you said, the DoorDash, the gig economy, that's the job. Someone online doing something with NFTs or, breeding horses on Zed Run and being able to race them and earn money. That person doesn't have a job, so they're technically unemployed. Are we looking at are we still kind of like managing our economy in 1.0 when we're building the 3.0?
I think that is true in so many different dimensions. I mean, the way employment is measured, to the point you just made, is completely false. The way prices are measured, the CPI, is a joke, right? It's just something the government kind of shows up and says, look, inflation is not that bad. And it's going away. Don't worry.
Yeah.
Yeah,
But
I
it
think
is
all that's
bad,
broken.
and it's not going away. That's the problem.
Correct.
Do you see a future where prices won't be just like, how does it work with equity and with shares and things like that? Right now, we're just looking at the dollar or crypto or burst being the mechanism in which things are transacted. How do you operate if someone wants to build something where there's equity involved or shares or warrants? Has that ever been asked for?
Like denominating the value of an hour of your time in something other than dollars.
Yes.
Yeah, I mean, I think this is a lifeblood of all startups, right? Is figuring out how much ownership someone should get in an enterprise, in exchange for taking, a depressed or below market rate salary. What's hard about that is traditional startups get valued maybe once every 18 months or something, and it's usually a VC doing some relatively unsophisticated math to
Yeah.
come up with the valuation. With crypto projects, when you have a liquid token, to be clear, like, tokens aren't equity, or a lot of them aren't. The Braintrust token is certainly not designed to be equity or a profit return mechanism. It's a governance and utility token on the network. But it does have value insofar as it's useful, right? It represents control of the
I would
network.
argue that has more value in the things of tomorrow than equity does.
Well, what's interesting is I've heard some VCs in this space say exactly the same thing. So we're a number of us are trying to figure out how to build a Web3 valuation network, and it's tough, right? It hasn't been done before. The normal kind of valuation frameworks for stock to flow and MV equals PQ, they just don't make any sense in utility networks. And so I've heard some really smart investors say exactly what you said: is when something is finite and it represents control over a network, like, how do you value that, right? It's certainly more valuable than stock. Stock equity is just a claim on future profits.
And tokens are a battery for future value in a way. You're tokenizing future value of these networks. So you're talking about owning a piece of the software of tomorrow, but it's not like someone is digitally issuing that license key. This is baked into the open source network code that these tokens run the network. So by owning a certain amount of tokens, and then when you hit certain thresholds of ownership, and this is something that we could talk about in the larger ecosystem that I've learned, is that there's a different type of investor. When you own a certain amount of these tokens of a certain project, you start to feel like you have a moral responsibility to make this project great. And I love that because it's a much stronger tie-in than financial incentive.
100% agree. It's true ownership in the real sense of the world, like the moral sense of the world. Ownership in economic terms can mean a claim on profits. In our token world, it really does mean a sense of civil duty and we've seen that in our community. I mean, you see it. Look at the ENS token drop that just happened,
Yeah.
right? Like those folks, and I'm one of them, genuinely care about that network, deeply believe it is superior to centrally controlled DNS. And that ENS token, like there are no sellers
It's
for a
so
reason.
cool.
Yeah.
We look at ownership sometimes through our like very limited lens. And I didn't know, for example, if you go to Delaware, for example, the state of Delaware, even some places in Maryland, if you go to the beach to Delaware, you can't buy property. I know the Europeans are like, what? Yeah, you have 99-year leases on these things. So in a lot of places in the US, the concept of ownership of property is not like forever in perpetuity. You just have a 90-year lease, or they have different names for it. That's how it is in Europe. If you want to buy a house in Amsterdam, you got to get permission of like the block warden, and then you're just getting a right to lease for a long time. So if we look at kind of like that, and we say, wait a minute, if equity is like owning a house, but there are other ways of owning something or having the future right to it, tokenizing cash flow is the same thing of like a leasehold.
Yeah, absolutely right.
It's so cool.
That's the amazing thing with tokens, right? They can be programmed to do just about anything. They can be programmed to look like securities, right? And that's what a security token is, I guess, if that's still a thing. But having it be like your membership ticket into a network and your votes for Braintrust, we forked compounds, Governor Alpha. It's one token, one vote. And we've had a lot of, since we hit mainnet, a lot of very lively discussions about what the future of the protocol should be. Discussions led by people who make their living on Braintrust. So they have a dog in the fight.
Guys, we need to talk about how to use your Bitcoin and your USDC to earn you interest and make you more money. To do that, we're going to talk about our newest sponsor, Ledn.io, a much better home for your Bitcoin. They're amazing. They're a secure, simple, and easy-to-use platform for managing and growing your digital wealth. On Ledn, you can earn interest on your Bitcoin and on your USDC with some of the industry's best rates. Earn 6.1% APY on your first 2 Bitcoin and 9% on all of your USDC. That's right, all you need to do is deposit your coins and you'll receive steady payouts at the end of each month just for leaving your coins with them. 6.1% on Bitcoin is pretty huge. You don't find that same kind of return elsewhere without taking a much greater risk. And 9% on your USDC, think about what kind of rate you'll get if you had dollars sitting in your bank's savings account. Probably almost nothing. If you've got dollar savings sitting around, this seems like a no-brainer. All you need to do to sign up with Ledn is send a bit of Bitcoin or USDC their way, and then sit back and let the interest accrue. So what are you waiting for? Go to untoldstories.link/Ledn to start earning interest on your Bitcoin or USDC today. That's untoldstories.link/Ledn. You're going to love them. Enjoy. We're all used to investing in different types of cryptos, and we know that you can buy as little as $1 worth of any coin or token, but you can't do the same thing with stocks, bonds, and ETFs and all those other like traditional assets. And then if you can't do it all in the same place. Our newest sponsor, Public.com, it's a super awesome community where they take your privacy seriously, and you can get in there and trade slices of crypto, Bitcoin, all different coins and tokens, and also stocks, bonds, ETFs, equities, and it's all done in the same place. What I love about it is that you have all these different investors you can connect with all walks of life, gain confidence, ask questions, get the big picture with curated themes, talk to everyone, but they don't get involved in the order flow. They're not selling your data to all these other middlemen. And we got a very good special for you, my listeners, today. If you go to public.com/untold stories and you start investing with $1, they're going to give you up to $50 in a free stock, a slice of a stock. That's all you got to do. Download the app, $1, you get $50 worth. Public.com/untold stories, valid for U.S. residents, 18 plus only, subject to account approval. And make sure you check out public.com/disclosures. There's no investment advice here. These guys have been doing and amalgamating all of these different types of community, stock, bonds, ETFs, cryptos, all together. Make sure you check it all out. Public.com/untold stories. So this is something very cool that I've been noticing too. I've been talking to a lot of people on the show over the last few months where their blockchains have matured, mainnets have launched, and you have very robust developer networks, users, abusers, ones who are making sure that it's all working all the time. You have, you have the list of businesses, you have that are using the marketplace right now is insane. What I'm noticing is that the old days of the highly volatile pump and dump of these more mature tokens is going away. And so much to say that I had a previous guest who calls his token a stable coin, even though it's not not meant to be, but because the market is so perfected of buyers and sellers and demand, and those who are earning it and those who are holding versus selling it, that you see like a nice 10% appreciation year over year. But he's like, I like that. What do you think? Do you think the futures of these tokens are like more stable, a slow appreciation growth? You're like, it's kind of a beautiful thing in a way.
Yeah, I love this topic because I think there are more creative and probably more accurate ways to look at this than assuming the US dollar is the gold standard of stable coins, right? Like, do a volatility. Wait, is Bitcoin volatile or is the dollar volatile?
Yeah,
Flip the pair. I would argue the dollar is way more volatile, especially lately, than Bitcoin, because the dollar is being massively inflated and the government is completely mishandling it. And we don't even know where this money's going. It's paying people to stay home and not work, which drives prices up. And we're in this, inflation death spiral, hopefully not stagflation later. And people say Bitcoin's unstable. I don't know. I think we're thinking about it the wrong way. I think this is the idea of the dollar being the global reserve currency. To me, it is becoming more and more anachronistic because of the way the Fed handles the supply.
Do you think stagflation is where we're going to go in a few years from now?
I sure hope not. I really do. Yeah,
what does that word look like?
It's
like the 1970s type of thing.
Yeah,
like
exactly.
Recession inflation, where the demand doesn't keep up. Yeah.
And just raising interest rates can't stop it. And it becomes this kind of death spiral where people can't afford goods and the currency, becomes more and more meaningless. And it's, I hope we don't get there.
I'm like scared of this topic, but we need to talk about it a little bit because I need to keep everyone aware. I talked to a lot of people who went through hyperinflation. I've had friends who went through hyperinflation in East Germany to, from actually one of my good friends runs one of the largest Bitcoin ATM companies in the US who went through like the hyperinflation, grew up in East Germany. Like that's what the people like Leonard Lopin from Byte Federal, if anyone wants to listen to that show. That's what's crazy. So these folks have been through it. And I went to school. I learned about a stable dollar, stable currencies. But then I'm just looking at my adult life. I'm 30, a little over 30 years old. My adult life, I've been through 2008, 2009, 2011, 2001. I look at, I thank God, I thank Satoshi every day because I look back and since 2009, the only stability that I've had is my wife and Bitcoin. That's it. The dollar has not been something that I could rely on. And I'm not saying this like I'm not this crazy lunatic. This is personally, this is me. I can't rely on it anymore. It's scary. I don't like talking about it though.
Yeah, no, I'm with you, man. Well, as long as you got a great wife, which it sounds like you do, I've heard you talk a lot about her, and you got enough Bitcoin, life is good.
I just heard this morning, I can't believe I'm actually starting to hear folks say, well, one way that governments or businesses, or actually the future of the dollar rests on the Fed buying Bitcoin and keeping it on its balance sheet, because Satoshi was very smart. Bitcoin, no one created it. It's its own. It was created by the people. For all we know, Satoshi was a group of 10,000 people that are really good at keeping a secret. So Bitcoin was created by the people for the people. It's the most American thing in the world. So if you have, that is the future of the dollar 3.0. It's why China is trying to get their own central bank digital currency. And sure as hell, they're holding Bitcoin on their balance sheet.
Yeah, well, they've been mining most of it. Um,
Yeah.
yeah, the central bank digital currency thing, it's just a control, right? It's how you make sure you can call back supply, as opposed to the system we have now where we print, and they think in the old days, raising interest rates would be the way to call back supply. It just doesn't work that way anymore. And so the Fed here has a strong incentive to use a central bank digital currency. But I think that comment is true. The more hard money that backs these fiat currencies, and the hardest of hard money, of course, is Bitcoin, the safer these fiat currencies' future is. I'm a little more pessimistic than that, though. I think this thing is out of the
Yeah.
bottle.
Really.
It's being in dollars. I think the dollars is probably maybe the best of the fiats. I don't know.
Yeah. The
I haven't
last
studied.
domino.
Yeah, but it's still the worst store of value at this point. Now that you have all these other um, uh, permissionless,
Yeah.
highly secure layer ones.
So I use we hire a lot of editors for the show, sound engineers. We do a lot of different type of like tech jobs that are very specialized, but I don't care where you're based. You know, the podcast, we go live, we record from all over the world. I use another one of these like gig economy marketplaces. Why should I start using Braintrust?
Well, chances are you're using something like Upwork or Fiverr for
Yep.
kind of smaller jobs. Totally great. We use them once in a while too. They're very different things. Braintrust is a network for people who want essentially full-time work. Like they want gigs that they can live off of.
Oh,
So I'll give you an example. Like the Upwork's normal job size is $500. The average job on Braintrust is something like $77,000. And so you can have a programmer, computer programmer on both sites,
oh
but
my God.
because the fees are so high on Upwork, Goldman Sachs is not going to come put $100,000 job on Upwork or Fiverr. They're going to come to Braintrust to do it. So Braintrust
Okay.
is an enterprise talent network. And it's really above that. It's a protocol for work, right? Now Braintrust could get into and compete with lower.
No, but you don't need to. Like for example, I'm right now trying to hire, if anyone's listening, I'm looking to hire someone who like worked for a comedy TV show. So if you worked for like Jon Stewart, if you worked for like Saturday Night Live, if you worked for any variety show type of thing, and you know crypto, you're a comedian and you write jokes, I want to hire you. This is a 6-figure job. You know, work full-time for Untold Stories. I can find this person on Braintrust.
Not today. We're not
Oh,
in
come
that
on, you're killing
category.
me. But
Oh, I know,
almost
man.
there.
I mean, how many people fit that description?
Very
Probably
few.
20 people in the world who fit that. But so I mean, the bigger idea here is like Braintrust is an open protocol for work that connects any kind of talent with big clients. We have focused traditionally. The project's only been live for 18 months. We've focused traditionally on big enterprise companies like Nike and Goldman Sachs, finding technical talent, designers, programmers, product managers. The protocol is open source. It could be used for any category.
That's so
right?
cool.
We've had people come to us and say, how about Braintrust for lawyers? Right? We should unbundle the law firm. And so I can imagine someone using the protocol for that. Braintrust for television writers. It's a great idea, right? It's not something like I'll work on, right?
So this is like an open source whole ecosystem now.
You got it, man. Yeah, that's the whole point.
That's so
right?
cool.
So we built this playbook in hopes that other people that love other categories. I've been in the tech category for a long time, so I'm going to stay in this category. But we've had lawyers come to us and say we're going to build the legal category out.
I'm going to do it for
Braintrust.
actors. I'm going to do like Braintrust Hollywood, and I'm going to do writers, producers, actors, directors, you know, and then you want to have the whole, and this is the thing, you look at, here's a great example. I'm sorry for constantly cutting you off, but
No, please,
I want to
it's
use the
awesome.
film industry. The
Yeah.
ones who do the most work get paid the least. The grips, the cameramen. I just was living on a film set for 30 days. These are like the freaking soldiers. They are the front men and women. Actually, more women than men now, but that are literally putting on the show. They get paid the least. They get paid the least because they're the last ones that people worry about. There was almost a huge strike in Hollywood a few weeks ago because they were trying to, But why is it that their unions are negotiating on behalf of like grips who live in upstate New York? It makes no sense. Brain Trust Hollywood. You're talking about efficient price discovery for every industry.
100%, dude. And think about it. It would disintermediate agents,
I'm writing that
right?
down.
Think about how much agents take out of talent's paychecks, right? It's 20, 30,
Yeah.
40%. That's what
Yeah,
Brain
it's
Trust is set up
it's
to do.
30%. Your manager takes around 10, 15 for the agent, and then 5 for there's always points that you have to pay someone. So if you're
Yeah.
and most people don't realize that right now, I just did a movie. Right now, like these actors aren't making copious amounts of money. There's like 12 actors are, but the average actor who you see on billboards who, Cobra Kai type people, $30,000-$40,000 for a movie. Like, and
Amazing.
that's if you're really good. That's if you're maybe 50. Maybe Seth Rogen or whatever is getting 70,000. So it's not something that can trickle down to all these different people.
I mean, imagine an open source tokenized network that connects the producers with the talent they need.
Yeah.
It's Brain Trust, but for Hollywood. Absolutely.
We're about to do a film in Scotland, and that film is based on getting the best actors and actresses in Scotland because the film can't afford to bring in people from outside of Scotland. Uh, if there was a mechanism in which you can create very specific metrics, you want someone who's done horror films, who has these, physical or psychological attributes, who's went through potentially people who went through trauma that could play on that, potentially people who, you have to have certain type of things, tall, short, whatever, who live in Scotland. Like that doesn't exist. It doesn't exist. You
Well,
got to go through actor breakdowns and pay casting directors, and by the time all said and done, that actor's making $3,000, but it cost you 13 to
yeah.
find that person.
It's amazing the similarities with Brain Trust. It's skills, location, or which time zone will you serve, since the work's all done remotely.
Yeah.
Language, right? So you take that whole archetype, like the whole database that you're talking about, and you apply it for actors. Tall, short, to tone of voice, accents you can do, whatever, and style of acting you do. And it's a taxonomy that every actor signs up for, creates their profile. You can maybe even import your IMDb. And then producers can, when they get on the ground, can just tap right into it and do casting calls right off that network and pay people through the network.
And then, like in a decade from now, someone could borrow money to get a house based on the work that they've done and the future work that they're going to do at a
Absolutely.
very efficient rate.
If you think about the token that would run this network, I'll just use our network for the Brain Trust network because I know it the best. But if you earn a lot of the only way to earn Brain Trust tokens is to help build the network. You can invite more talent, vet the talent, invite clients. Most of our clients came from network invitations, referral engine. You earn tokens for doing that. If the tokens end up being valuable because they control the network, yeah, borrow against them, and there you go.
And that'll create more price discovery because what'll happen is folks who have money will want to lend to very, very highly specialized, actors or tech people or whatever category you're in. Those are the perfect people to lend to. And then what's going to happen is banks are going to say, if you're not on Brain Trust, we won't lend you money. And that is when we're getting to the next level. Adam Jackson, I thank you so much for coming on Untold Stories because now we're blowing people's minds here. Now we're blowing people's minds. This is crazy.
Charlie, big fan, and this was an awesome conversation. Thank you so much for having me.
I just want to ask you, like, what do you envision 5 years from now Brain Trust look like? Do you think you're going to have dozens and dozens, hundreds of different Brain Trusts all contributing to the same type of ecosystem?
Here's what I see. So Brain Trust is a protocol for information workers, knowledge workers, to leave their cubicles, their W-2 jobs where they're being underutilized at some corporation and being forced to go to an office and work on things they don't want, to peel out and specialize on just the things they want to do, when they want to do them, from where they want to work, at an hourly rate they think is fair. Everyone becomes their own business. Everyone becomes their own freelancer. This is what the gig economy promised to folks that deliver food, people, and products. And it ended up being kind of exploitative, right?
Yeah, it
Because
stopped there. It
yeah,
never went to that
DoorDash
next
ends up
level.
making all the money, right?
Yeah.
DoorDash pushes restaurants into negative gross margins and doesn't pay Dash, pays Dashers well below the minimum wage, the federal minimum wage of $15. Turns out it was just an exploitation of labor. And that is still true today. Braintrust is the opposite. It doesn't charge the talent any rake. It's transparent. It gets out of the way. It lets the users who make their living on the network also control it. And so we're just in this narrow category of IT outsourcing today. In 10 years, I see every lawyer works through this, every accountant, everyone who sort of is a knowledge worker. There's no reason to have a full-time job. There's no reason to belong to a firm that takes 50% of your revenue. You control your own destiny.
We've been on this theme of smart cities, and that's going to be part of that puzzle piece too, is that smart cities will hire smart people to do the work. So the person or the people that are hired by the smart city, by the DAOs that are governing these cities, it's so cool, are
I
going to
love
be
that. I
tapping
love that
into these
concept.
brain trusts. Oh my God, I could do a whole show. I could do a whole
You
season on
should.
smart
Oh my
cities. I know.
God. I am obsessed with smart cities. I love the idea.
The cool thing about it is that the people who want to talk about smart cities the most are the politicians. Like my local mayor downstairs, he's literally having coffee downstairs right now. If I bring him up in the studio to talk about smart cities, he's gonna be all over it. Like people
Awesome.
love talking about this, and it is the future. The mayors, the councilmen, the city that you live in. You look at the news, just like, and COVID really gave a lot, and that's one of the benefits that came out of COVID, I would say, because there are good things that came out of this whole epidemic that we went through, the pandemic, sorry, is that home rule. We saw the power of cities again. The San Francisco City Council has more power than the county or the state government. And states are more than happy to defer that power to local city council. I think that's an amazing thing.
I think
It's
it
amazing.
is too. And now it matters quite a lot who your
Yeah.
mayor is, right? Just ask anyone who lives in San Francisco or Los Angeles how much that matters. And I'm very glad that where you live, they're talking about smart cities. Where I live in San Francisco, you'll never hear that term. Never, never, never.
Yeah. Your city has a lot of other things that they're dealing with right now. I don't think there's time for smart cities.
Agreed.
But on that note, I'm a bull on things that people are bearish on. So as soon as people are like the end of cities, I'm bullish on cities. So,
Me too.
buy when there's blood. Warren Buffett, he may not like Bitcoin, but he said something smart. He said, buy when there's blood on the streets. Never been wrong about that. So, I mean, Adam, thank you so much for coming on Untold Stories. My listeners, thank you guys for another amazing day. And I'm very excited to see you back in a few days, talk about smart cities and all the cool, fun stuff. So have a great week. Thank you, Adam.
Thanks, Charlie. Great to see you.